Hello everyone. Welcome to the Stock Minds web channel. Pinnacle Financial Partners, NASDAQ PNFP, delivered an impressive Q2 2025 performance that caught the attention of both value-seeking and growth-oriented investors. With revenue jumping nearly 43% year-over-year and EPS soaring 212%, the regional bank not only beats expectations but also offers solid valuation metrics. In this video, we will dive into Pinnacle Financial recent earnings, stock performance and valuation, growth potential, and the risks investors should consider. About Pinnacle Financial Partners. Pinnacle Financial Partners, founded in 2000 in Nashville by a group of local entrepreneurs, has evolved from a single downtown Nashville branch into a regional banking powerhouse. The company now operates across Tennessee, North Carolina, South Carolina, Virginia, Georgia, and Alabama, offering a full suite of financial products, commercial and consumer banking, wealth management, mortgage, insurance, treasury solutions, and specialty services. Their growth strategy combines relationship banking, targeted market expansion, for example, recent launch in Richmond, Virginia, strategic subsidiary development like Bankers Healthcare Group, and aggressive recruitment of revenue-producing bankers. Pinnacle Financial Performance. Pinnacle Financial Partners delivered a strong financial performance in Q2 2025, underscoring its position as a high-performing regional bank. The company reported quarterly revenue of $480.75 million, a significant 42.91% increase compared to $336.39 million in Q2 2024. Earnings per share, EPS, also surged, climbing to $2 from 64 cents, marking a remarkable 212.5% year-over-year growth. On a trailing 12-month TTM basis, revenue reached $1.81 billion, up 21.56% from $1.49 billion in the comparable period, while TTM EPS rose to $7.51, a 48.26% increase from $5.06 a year earlier. These gains were supported by robust profitability metrics, including an operating margin of 40.59%, a net profit margin of 32.93%. Return on assets is 1.15%, and return on equity is 9.32%. Over the past 5 years, Pinnacle's revenue per share has been growing at a 15.4% CAGR, while EPS has been growing at a 14.8% CAGR. This shows that Pinnacle has been growing steadily and consistently over the period. Pinnacle Fiscal 2025 Financial Forecast. Looking ahead, analysts project continued growth, forecasting 2025 revenue of $2.02 billion, a 16.58% increase over 2024, and non-GAAP EPS of $7.85, representing 13.93% growth from $6.89 in the prior year. Reflecting this optimism, analysts have given a buy rating with an average price target of $126.21, implying a potential upside of 9.86% and the highest target of $145, suggesting a possible 26.17% upside for investors. PNFP Stock Price Performance and Valuation. At the time this video was created, the stock was trading at $114.88 per share. PNFP stock has gained 29.4% over the past year, significantly outperforming the S&P 500's 10.8% gain in the same period. Looking further back, PNFP has delivered a remarkable 192.4% return over the past 5 years, far exceeding the S&P 500's 93.3% gain, highlighting its long-term outperformance. Additionally, the company offers a dividend yield of 0.82%, providing additional return for investor. Despite this impressive appreciation, the stock still presents an attractive valuation. It trades at a price-to-sales (PS) ratio of 5.27 TTM and a forward PS of 4.34. The non-GAAP price-to-earnings (PE) ratio stands at 15 on a trailing 12-month basis and forward PE of 15.02. Based on Fiscal.ai data, if we look at the valuation over the past 5 years, the forward PS is in line with the average, while the forward PE is slightly above the average. This indicates that the stock is still reasonably valued, as it is projected to grow at a double-digit rate in 2025. Pinnacle growth potential. Pinnacle growth prospect remains robust, driven by several factors. 1. Aggressive loan growth strategy. Pinnacle Financial Partners posted impressive loan growth in Q2 2025, achieving a 10.7% linked quarter annualized increase in total loans. Commercial and industrial (C&I) lending led the surge, jumping 21.9% on an annualized basis. This strong performance is directly linked to Pinnacle's dynamic hiring strategy. The company recruited 38 experienced revenue producers in Q2 alone, bringing the total additions for the year to 71. These seasoned bankers expand Pinnacle's client reach and origination capacity, supporting rapid loan growth across the bank's network. The focused recruitment model allows Pinnacle to capture new business and poach clients from larger competitors, driving momentum even in a challenging interest rate and economic environment. As a result, the company's scalable approach is fueling both near-term growth and longer-term expansion goals. 2. Strong Bankers Healthcare Group (BHG) performance. Bankers Healthcare Group (BHG), a key contributor to Pinnacle Financial Partners' performance, delivered robust results in Q2 2025. Income from BHG rose to $26 million, a significant 39.3% increase year-over-year, highlighting the success of its specialized lending model. Loan originations at BHG reached $1.5 billion during the quarter, an impressive 72% jump compared to Q2 2024. This rapid growth is attributed to BHG's asset-light approach and focus on third-party capital, which allows the subsidiary to scale without straining the parent bank's balance sheet. Responding to sustained momentum, management has sharply raised BHG's full-year 2025 earnings growth forecast to approximately 40%, up from the previous 20% estimate. BHG now accounts for over 12% of Pinnacle's total revenue, strengthening the company's diversified income base. 3. Strong deposit franchise. Pinnacle Financial Partners showcased robust deposit growth in Q2 2025, adding $519.8 million in total deposits. A notable driver was a $133.4 million increase in non-interest-bearing deposits, predominantly client operating accounts, which provide essential low-cost funding for the bank. The company's core deposits have grown at an impressive 11.5% annualized rate year-to-date, further strengthening its liquidity position and supporting ongoing loan expansion. This strong deposit franchise allows Pinnacle to fund rapid loan growth without excessive reliance on higher-cost wholesale funding, bolstering net interest margin resilience. The consistency in deposit gathering, alongside disciplined capital management, positions the bank to outperform peers even amid rising competition and fluctuating rate environments. Risks to consider. While PNFP seems like a good stock, we should be mindful of potential risks. 1. Credit risk and loan portfolio stress. PNFP's loan portfolio, particularly through its Bankers Healthcare Group (BHG) subsidiary, faces heightened default risk. In Q2 2025, BHG's loan loss reserves were reported at 10.5% of held-for-investment loans, indicating potential vulnerabilities in its healthcare-focused lending. Additionally, construction and land development loans, which constitute 61.8% of total capital, are inherently riskier and could strain capital buffers if economic conditions deteriorate. A significant increase in non-performing loans could impact profitability. 2. Interest rate sensitivity. While higher interest rates have improved PNFP's net interest margin, reported at 3.23% in Q1 2025, prolonged rate hikes could pressure borrowers, particularly in PNFP's commercial real estate and commercial and industrial C&I portfolios. A mismatch between deposit rates and short-term market rates could further compress margins, especially as non-core deposits, for example large time deposits, surged 37.3% annualized in Q2 2025, signaling rising funding costs. 3. Regulatory and compliance risks. PNFP faces regulatory scrutiny, particularly regarding its BHG subsidiary, where its minority stake could be diluted if majority shareholders demand a sale. The classified asset ratio improved to 3.9% in Q2 2025, down from 4.44% in Q1 2025, though still above 3.79% in Q4 2024, indicating a slight stabilization in asset quality but ongoing potential for stricter oversight. Federal and state banking regulations, including Basel III capital rules, also restrict dividend payments if capital levels fall below required buffers, potentially limiting shareholder returns. Conclusion: Pinnacle Financial Partners (PNFP) has proven itself as a standout performer with robust revenue and earnings growth, strong profitability, and consistent stock outperformance. Its solid fundamentals, attractive valuation, and positive analyst outlook make it a compelling choice for investors seeking both growth and value. With expanding markets, disciplined operations, and rising EPS forecasts, PNFP is well-positioned for continued success. Despite some industry risks, the company's strength and strategic execution support a favorable long-term investment outlook in the regional banking sector. But remember, this is not a financial advice. What do you think about Pinnacle Financial Partners? Are you buying, holding, or passing? Drop your thoughts in the comments below. If you found this video helpful, please make sure to like, subscribe, and hit the bell so you don't miss my next stock analysis. Thanks for watching, and see you in the next one.